Evening, everyone. Cullen here, and welcome to Lawyer Lending Live. Got a special treat for you all. I've got two powerhouses from Ryker Capital, both 18 years in the realm of financial planning and helping people live their best life. So could you please make very welcome my two guests that I'm bringing on today, starting the Instagram live feed right now. We've got Regmi and Tamara Story. How are you both?
G'day, Cullen. Good. How's yourself?
All the better for hearing your dulcet tones and seeing you live. Where are we beaming from? Where are we coming from right now?
We're coming live from Day Street, which is one of our main offices in Sydney CBD.
Fantastic. And look, are you back from holiday? You're back on deck now?
Yeah, well, I came back last week, and Tamara
I did as well. Just keen beans. Had a good break though, of course. Had a lot of family time, a lot of fun time, but yeah, back for a while. Very busy.
Good to be busy. And what's happening in your circle of influence? What are you seeing in the market right now with your clients and what's going on?
Lots, and I'm really surprised that as soon as we came back, it's absolutely kicked off with a bang. I don't know, something about 2024. It's just been it's been busy. I'll tell you that. But it's been good busy. We've sort of come about, and customers wanting to make sure they're settling into their homes and wanting to make sure they're covered and protected. So there's been a fair bit of that.
It's good. And I would encourage people right now. It is now 4:44 in Sydney, the East Coast, as it were. If you've got any questions for these two behemoths, please put them in the comments. And remember, we are streaming live on Facebook, LinkedIn, YouTube, Twitch, X, and Instagram Live. So put your comments in there. I was with Jessica Cunning on our Law Live earlier today, and I got my first Twitch tweet or Twitch comment, and someone said, I look like Saul Goodman. So I don't know if that's a good thing or a bad thing. Saul Goodman from Breaking Bad and Better Call Saul. But nonetheless, we'll go with that. But to give people the flavor of what we're talking about and what a financial planner is or a wealth advocate is and what they aren't, I think there's a misconception out there that there's those that are trying to peddle properties in Queensland. No disrespect to anyone in Queensland, but what should a good wealth planner, advocate, or financial planner be doing for someone like our clients who may be an elite partner in a firm or building their career?
Great question, Cullen. Look, I think firstly, just to put a bit of understanding what a financial planner does. Look, our job primarily is to look at different clients from different life stages. And effectively, depending on what life stage they're in, then we look at some of the tax minimization strategies. We look at the superannuation structures. We look at their personal insurances, bit of retirement planning. So there's a variety of component that goes into as to what a financial planner does, but primarily it all depends. It's all about the life stages to what life stage they're at. But the big chunk of what we do, we go to every single one of our clients going, hey, you've got a good chunk of 20 years of life, working life. Let's look at how we can minimize your taxes.
Yeah. And that's tax minimization, right? Indeed.
Tax minimization strategy, indeed.
Okay. So when do you find that people come to you? Because obviously we're looking after legal professionals and their mortgages and whatnot. So typically a sound time to come is after they've taken out their dream home, for instance. They've maybe borrowed 90%, no LMI, which lawyers can do. But they've got this, it's not cheap in Sydney. If you want that dream home, it's, at least $1 million, $2 million, right? So they got this big loan. What's the question that you usually ask once they've got that big mortgage? Is what if? Is it the what if question? What happens? Touch wood, something happens to you. Is that the go-to thing?
Well, it definitely is risk management. Because anytime you make a move like that and commit to something, a review of what your risk management strategy is 100% what you should do next. Most people, of course, in Australia will have some insurances tucked in their super. There's lots of data around that. Very, very seldom is it something that even touches the loan amount, let alone the other things that you need your cash for. Food on the table, a little bit of fun money as well. So whenever you make a big commitment like that, a review of your risk management strategy, number one.
Yeah, and obviously number two, I think we already sort of spoken about just very briefly there. We look at their goals and aspirations to go, well, what is your goals and aspirations? What do you want to do? What is your wealth building exercise, or what is that you're planning for? And 9 out of 10 times, I think what we sort of hear from the clients are going, well, we want to acquire another property, we want to acquire another asset. So how do we go about that in a very tax effective way? And I know, yes, you want to insure yourself, but also let's look at going, well, how do we sort of create those policies in a tax effective way? So everything that we do or create, how can we do a bit of in a tax effective manner?
And a legal manner, right? Because our lawyers are trying to.
Is legal.
We want to go under the fence. We don't want to go over the fence, right?
No, we don't want Anthony Albanese knocking on the door now.
We got that what people saying, but I'm glad that you clarified that as well. And to add complexity, there's an overlay. People want to do lots of things with their money, getting a property, lifestyle things. There's lots of aspirations, goals, and needs that people want their money to achieve for them over different life stages. So we have to have that overlay and make sure that everything we're doing in a tax effective manner is actually delivering on these really important things that people want their money to do for them for their lives.
Makes sense. And our legal professionals appreciate calling a spade. Like, what age or income should people start thinking about it? Is it graduate onwards, or is it a certain level of law that they should get to that they go, maybe I need an advocate on my side to help me with this?
Look, I think, Cullen, any stage when you're starting to work full-time in a full-time employment, I think the earlier the better. The rule of thumb has always been the moment you start in a full-time employment, you should always look at going, well, I'm starting at the point A. What are some of the goals and aspirations I have with my money? What do I want my salary to do? Is my goal to buy a property? Is my goal to sort of build up a superannuation, build up a stock portfolio? Whatever that looks like, I think earlier the better.
Earlier the better. Oh, very good. It's good to hear that you're catering to both ends of the spectrum there. Absolutely. What are you finding that with the big upheavals in the financial planning space has done for what you're able to get clients? Is it helping, or because there's less financial planners out there, so they're getting more tailored advice? What are you finding? Because obviously the government keeps on shifting the needle on it, as it were.
Well, that's why you need a financial advisor, because as we were talking, we actually did a podcast yesterday, and part of it was legislative change.
Yeah.
Because really being a financial advisor, we are aware of potential changes that are getting flagged, and then when they become legislation, and then really, particularly with existing clients, does this affect current strategies? And so we're always trying to be, and then new clients, it's like, this is coming down the pike, or this has just changed, and it really does affect what you're doing right now.
Mm-hmm. And look, I think Absolutely. With the laws, it's not just the government side, but it's also every budget you look at and you go, you've got a completely different set of rules for superannuation, insurances, and the likes with your Centrelink strategies. So you're constantly finding yourself updating, but not only sort of referring to some of the grandfathered policies and rules that you always go back to going, well, this was the rule at that point in time. How's that going to affect my customer now? So there's a lot of provision of grandfathering that you also have to keep in mind whenever you're sort of forming or creating different form of tax, super, insurances, retirement, different kind of strategies for the customers.
Yeah, very, very. I'm endeared by what you're saying there, guys. Yeah.
Yeah.
Oh, what was that, Tamara? Sorry, missed that.
No, I apologize. There's a bit of a lag, so that's me bad with live streaming. So that's calling that out straight away. Was also saying that really we want to make sure that when you're starting out, like what Ray says, you want to make sure that you really dig into what you want to do with your money, because how you set up your structures and your setup to grow, to go towards your goals is really important. So you want to get that right at the beginning, rather than ticking along in whatever type of structure you're using DIY, and then down the track going, oh, that tax effectiveness. Yeah. If I would have talked to an advisor earlier and gotten my structures better, that does make a big difference. So that's kind of another layer to that as well.
Another layer there. Okay. And is I know 𝗥𝗆𝗿𝗶, The Richest Person in Babylon, is a very famous book where, people do 10%, save. Are you finding that the compound interest thing and using term deposits and whatnot is a valid play? Or where are you seeing the opportunities now? Obviously property and various other instruments with crypto on the rise. Like, are those old adages of, save 10% of your income, are they still valid in today's market? I'd love to get your thoughts on it.
Very interesting question, Cullen. Look, I think I feel like it's still valid, and I think it just comes down to the individual and the habits that you create. Look, any part of financial modeling is all about the individual habits. Yes, while there are some people that are struggling given the rise of inflation, the cost of living being so high. I mean, I look at my Woolies bag, and I step out into Woolworths, and after I've spent about $1,000, there's hardly anything in the basket, right? So yes, I'm like, there are some people who are set up the right financial habits and sort of create the right financial structures for them, purely for the fact that obviously it does help.
Well, and that again is why we want to grab people, when they've got their first professional role and they're starting to make good money, because it really is about, managing your spending. Nobody wants to say the B word, and I'm talking budget, but it can be really sexy when you know what really intentional decisions, particularly on your discretionary spending, can achieve for you. So it's really making sure, and financial advisors work with clients all the time on those decisions, and then seeing what different decisions can do for you. Because the idea is you want to get those longer term things, you want your money to achieve longer term things, but you want to enjoy the journey along the way, particularly when you're younger, 20s, 30s, 40s, etc. So that's why those habits, really understanding what you're doing, how you can use your money, what different decisions can achieve for you, and then building up the banking structure and the habits to make sure that you're implementing that and you're moving forward.
No, it's a good thing that you're talking about there, Tamara. And is there anything that you wish you knew when you started out, or your clients wish they knew before they engaged you, or is the number one thing they go, oh, I wish I knew that? I'd love to dive a little bit more into that.
Look, for me, it's always been getting the complete snapshot of the customer. I think as much as information you have from the customer about their complete financial picture, it just helps you paint a little bit of a better picture in all aspects of financial decision-making process, whether it's the investment side, whether it's the superannuation, properties, crypto. So as much information as you have from the client, I think that does help you sort of paint a good picture, rather than going that moment going, I wish I knew that, and I would have completely had a different statement of advice for you. So I think having that complete picture for their financial goals and objectives and their aspirations, that's the key part.
Go ahead, Tamara.
Well, I was going to say, as a person, so not as somebody giving the advice, as a lay person, would have been getting into the property market probably sooner, and really understanding the importance of managing my cash flow and making decisions, which is why I brought that up earlier. The sooner you get into that, the better. I have 3 adult daughters, and that's definitely some of the stuff I'm working with them on right now.
There you go. Well, I'd love to ask the question. Rates are coming down potentially in 6 to 7 months, and I got lawyers coming to me saying, "Oh, Cullen," that's not a voice, but that's just my general person voice. Cullen, I'm thinking I might hold off buying property until rates come down in 6, 7 months. What do you think? So let's hold off my pre-approval. I say, if you wait till everyone else is ready to pounce when the rates come down, it's too late, because the prices will start going. Is that your assertion too? What do you think about this 6 to 7 month window where rates are kind of on hold before? Is it a good time to get in? I'd love to get your thoughts on that.
For me, it's a very tricky point, because where you see the opportunity and you find that opportunity there, I'd suggest that, if there is something I like, I'd pounce on it, because like you mentioned, everyone also has the same idea, that they are going to wait until this event occurs, and what you will just see is this constant increase of rates on the property, because now everyone's fighting for the same asset. So,
disclosure, this is not advice.
This is not advice.
Financial advice.
me personally, I agree with Ray from a personal perspective as well. Rates are there, looking at, if I find something that I think is really good, it really is all about what my goals are. For me, that's a starting point. I want to get into the property, not just for fun. I want to do something. So what do I want to do? Is this someplace to live? Is this for an investment? Is it for growth? What is my strategy? What is my time frame? Very similar to the stock market. It's kind of like, it goes up, goes down. You don't want to time the market. It's time in the market. And obviously you can look at it and consider a variable rate. So that's going to track the rates as they go down as well. So that's just, as again, not advice, but my personal perspective.
But the big thing also at the back end of that is also you do have to look at the long-term costing positions. And I think we were looking at one of these exercises for our customers where he's gone ahead and bought $1 million investment property. But when you look at the income and the expenses column, going, well, look, okay, it makes sense that you bought it for the tax reason, but your interest rate alone at the rate what you're paying is about $60,000 a year. And then you add all the other ancillary costs, phantom costs that are associated that you had with the property, which is the agent's fees, the rates, the water, the strata. you're shelling out about $90,000 or $100,000 every year. Now, out of that, if your marginal tax rate is 40%, what you're really getting back is 40 grand, but you've spent that extra $60,000 out of your pocket.
Good point. It's a good point. It's all these hidden costs, all those nefarious things underneath the surface you don't really think about.
No, and I think it's important to take that apart, especially if you've got this long-term objective of going, well, I want my asset to double up in value, but hang on a second, what are you spending in the meantime to get into that 10-year point? You want that your asset to double. Because don't forget, you also got to keep CGT in mind, because you're going to sell that property in 10 years' time, and it will go, give me a bit of CGT.
And you need to have a strategy and exit strategy as well. So really, that's part of what the modeling is about, isn't it? When you're working with a financial advisor, what are your goals? What are you investing in? Can you manage that from a tax flow perspective? Setting it up in a tax effective way. What's the net result, and what is the point of time? So there's a lot of those elements rather than just simply going, this is what I think. You want to take all of that into account.
Makes sense. And we touched on it earlier, but with the emergence of Bitcoin ETFs and everything like that, how many of your clients are asking, like the prevalence of crypto investing? Are they wanting to dip their toes in it? And what's your view on it? Not financial advice, of course, but I'm just seeing it all the time in the AFR. It's all over the place.
I am loving your questions there, Colin. ASIC, here they come.
I'm betting fewer people than previous before everybody got spanked a little bit last year. So definitely there was, I know, because obviously we've been in the industry for a while. So for me personally, my experience in the industry, there was a lot more. What about Bitcoin in the years previous to last year's spanking? So people a little bit less enthused about it, just as a general.
Yeah, I did have a few phone calls around, I think, where SEC has sort of recently given the go-ahead with the floating of the ETFs there. So I did have a fair few questions from the customers going, Ray, should I be considering it? And especially when I had a look at some of the prices for the Bitcoin for where they are at the moment, and they've absolutely spiked over the last couple of days. So look, there is a fair bit of interest there, Colin. Can we recommend it at a level right now if you look at our licensee level, or if you look at our compliance level at the moment? We're certainly not there yet, but it doesn't mean that it's not to come, where our aggregators or head office might allow us to sort of talk about Bitcoin and a variety of other cryptocurrencies.
But I think in general too, you want to have as well, because you can have some fun money. So for example, if you've got something a little bit arguably riskier like Bitcoin, it's a matter of getting a plan in place where if you do really well in your investment in Bitcoin, look, it's gravy, and you can push everything ahead as far as your goals. If it really goes flat and you lose your money, it's not going to total what your outcomes are and the needs that you have for your money. So that's probably, and maybe if you look at a rule of thumb or at a higher level, might be a good way of approaching it as well.
And to the early point, I think it's the entry and the exit point really, and like what point do you want to go in and what point do you want to go out, and what are you happy with from the outcome from a cryptocurrency?
I mean, it's similar with some clients too. We have that strategy and they kind of go, we want to play a little bit in the stock market. So they've got their play money. And some years they can come back to a review and going, hey, my portfolio beat yours. It has super high risk. But then of course the next year is like it totally tanked. So that's a little bit up and downy, and it's a little bit fun. They've got some core strategies with really balanced and appropriate risk levels that are actually achieving outcomes as well as an underlying strategy.
Yeah, no, well said and well tackled that question there, guys. You're doing that well.
I'm feeling like Asik's literally going to knock down our door. What did you talk about?
No, but like I see it all the time at the moment. Like people are looking, especially with the cost of living in Sydney and potentially rising, rent vesting. Maybe it's more valid to switching gears a little bit. Rent where you want to live and buy an investment property. How many are you seeing a higher incidence of people looking at that strategy given the cost of living rising? Like, what's your view on rent vesting? Because I see it all the time, obviously, as a valid strategy from buyers agents and on YouTube and things, but really want to talk to financial advocates about it and what your view on it is.
I love it. It's a great idea, as what I think. You know what I mean? And I think that's been a fairly common strategy for quite a while now. And I personally think it's still valid as well. And also rent vesting with, groups, I suppose. Obviously, you want to get a lawyer involved. You have to make sure you've got contracts and stuff like that.
Definitely want a lawyer on your side. Yes.
Yeah, absolutely. But we do get a lot of, siblings who are looking at rent vesting. There's an added layer of wanting to make sure, what is the exit plan, etc. when you're doing stuff like that as well. But certainly that, yeah, exactly. People want to work and live, lifestyle closer to where they work, etc. Even though there's still some, work from home, absolutely. But then, yeah, building your, I guess, your asset, your property chops, and maybe, moving in and getting bigger and bigger, I think it's very valid.
Yeah, and I think, look, again, with every part of the strategy, there is an entry and exit point. There is a value that you sort of undertake to go, well, what does that value look like? What does the taxes look like in the end? So you've got to do your numbers thoroughly to make sure that all the strategies add up and they're going to have a good value, even with that kind of approach. But yes, it's a very valid strategy and it does work. Just depends on the numbers.
And as with anything, any asset, but like property is a big chunky asset, right? You want to know when you're investing in something, what you're doing with it. What is it going to do for you over the life? Tax effective, cash flow. Are you going to sell it? What is the plan, et cetera, et cetera?
It's just going a bit further as to what that demographic of the area is generally going to do for you.
Exactly.
What are some of the growth potential in the area, and what are the growth that you might be able to capitalize on that?
Well, that's a really good point, and that's why it's really important to make sure you've got the right professional team with you as well. You know what I mean? Because you're wanting to make sure that this property needs to do this. So what is the nature of a property that's going to do that, right? Is it for growth? Is it for income? What are you trying to do? You need probably a lawyer, you need a financial advisor, you need a broker, you might need a buyer's agent as well, right? Get the right professional team together to make sure you get that right.
That's exactly right. So we've covered that on the property front. So well done there, guys. This one I get all the time, and we have some interesting conversations with some of my legal friends. Stocks or shares, or is it good to have a bit of a blend of both? I say stocks or property. Sorry, shares or property.
They're
the same thing. They're the same thing. I got the dad brain on with my 1-year-old that keeps me up at night.
I think it's a balanced approach, Cullen. I think there's room for both, and I think there should be room for both, because when you look at your part of asset allocation, what you want is as much diversification in your portfolio as much as you can. You should definitely have a good blend of properties, good blend of shares and stocks, and managed funds. But you should have a variety of different asset classes to build up your diversified portfolio. Because what you want is income coming from different sources. Like property is great, you get the capital growth and you've got the income, which is your rent. And look, to an extent, and managed funds and shares do exactly the same. If I would have bought a Commonwealth Bank share at $50 and it's got a growth of $100, that's your growth. And when they're paying these regular monthly dividends, 6 monthly dividends, that's my rent right there, and it's fully franked. How good they paid the taxes for. So, but ultimately, what it comes down to is tax structuring. How have you structured your assets, and what are some of the great benefits you can gain out of it? So, to answer your question, yes, there's room for both. If not, add another layer of diversification. You can add a variety of other different asset classes in there.
And I would definitely echo that. I mean, you'd be foolish in Australia not to consider the property market. People make a lot of money in property here. I mean, it's similar to Canada. Like, as we were talking about earlier, I am from Canada, spoiler alert, with my accent. You know what I mean? But that's the similar GDP makeup. So property, yeah. The other element is what is your gearing level as well. You know what I mean? So it's structure, to Ray's point. It's the diversification. Really have a look in property, because it combines two things, right? It's lifestyle as well as investment and stuff like that. But then, also definitely what is your gearing level? Those are different choices as well, with the overlay of cash flow.
And I think the big part we didn't talk about is estate planning, as to who's the end beneficiary of that product.
Or was that going to be a question?
Oh, yeah.
There we go. Yeah, I'd love to ask you, Ray. It's been on my mind about estate planning. Let's delve into that.
Look, ultimately, estate planning all depends on whether you hold the assets under the personal name, whether it's held under the superannuation. And look, obviously, we love superannuation as a part of the tax structure, because it's the only place when you retire. It's the only place or a tax structure, if you like, when you retire up to a $1.7 million cap currently, that you can make an income out of and pay no tax color. So for us, we love superannuation. All superannuation merely is a tax structure. And how do you then make that effectively from a estate planning perspective? Obviously, there's a few nuances in there that you sort of make sure that they are tax planning. And they're a very effective tool for tax planning as well. So, yeah, love the estate planning side.
Yeah, for me, estate planning is crucial for financial advisors. In the sense, clearly, we're not, coming up with this. That we're not making the structure. We're not doing the wills. We're really making sure that our clients have estate planning in place relative to their needs, and it affects the insurance recommendations that advisors make, the wealth creation, the structures, the property,
the stocks, the shares, the management.
It really is something, again, you need to make sure that you have the professional team together so your clients have the appropriate estate plan as well. Yeah.
Because if you look at some of the tax rates on the estate plan side, superannuation alone, if it's a non-tax dependent, you're looking at almost around 30-35% tax.
Well,
which is quite significant.
Well, that's exactly right. You've got tax equalization, for the beneficiaries that you want to, make sure you've got right. And then do you need a testamentary trust? Do you need several, depending on how many beneficiaries? There's all these questions. Depends on the risk. Do you have a high risk? Do you have disabled children? Do you have, people who are going to benefit that might be in a questionable relationship, or you don't know what relationship you're going into, or you want a separation, you want to go to the kids. You know what I mean? All this wealth creation. Definitely want to make sure it's pointed and delivered in the hands of the people that your clients want it to be delivered to.
And on the note of superannuation, SMSF, a lot of clients do ask, is it a good strategy to get into? I always say talk to your financial advisor or accountant. What's your view on SMSF for property wealth generation and that kind of play?
Look, I think SMSF is a great tool, Cullen. It gives you a lot of power in your hands as to how do you want that asset to work for you. So I think we absolutely love Self Managed Super Fund, but it's not right for everyone, if you like. So there are certain people that you'd want to make sure that obviously you explain the advantages and the disadvantages. I think the key thing is the knowledge and the understanding of how the SMSF works. And as long as you understand those structures, and where we've seen the SMSF particularly do well is for self-employed people or people who own companies, and especially lawyers, where they practice out of some of the assets. Let's just say they've got a practice in there and they practice out of there. It works as a great tax strategy, but it's also a strategy there that they have a lot of authority and power that you can run the asset as the way you want it to run.
I was going to echo that as well with regards to, if you're self-employed and you have to have a premise that you run your business out of, that tends to be, an SMSF tends to be a strategy that might benefit that type of a scenario as well, for sure.
Yep.
And definitely to your point, to both of your points, when you're working with a financial advisor, they're really clear about what that structure is, what are the responsibilities of a trustee, what are the obligations involved there. Now, do you really feel like you want to do that as well? And then still, too, you want to also, which I know the financial advisors do quite a bit, when you get more mature aged, when do you want to not have an SMSF?
Yeah.
When is that kind of structure kind of too much for you? And make sure you know what you're going to do when you want to exit that structure for whatever reason. And also, too, whether it's set up under a company as well, like if you have a marriage breakdown or whatever. How do you handle that too?
What are the implications?
Making sure you're setting up in the right way to make it as easy as possible if there happens to be a parting of the ways of the trustees and members.
Yeah.
Good point. And, we're getting to the end of our stream there, Tamara and Ray, and I wanted to ask you if there's one thing you could impart, one lesson, putting you on the spot, that you'd like people to walk away with, what would that be? Just one thing.
Cullen, for me, it's always going to be start your tax planning earlier. The earlier you start in life, you've got, as I mentioned at the beginning of the event, the sooner you start out your tax planning, the better it is. So it's more money in your pocket and less in ATOs.
Start earlier.
I love that tip. For me, it's really getting good, excellent professional advice sooner rather than later. Because you're always going to be able to, when you get good advice, you're going to be really clear about what that upside is over and above the fees you pay. There's going to be all that clarity there. And if you get really good advice, you will be farther ahead than without good professional advice as early as possible.
Well said there, Tamara and Ray. And where can people find you? Where are you hanging out the most if people want to get in touch?
Well, we are based out in CBD. Well, we're spread across nationally.
We're everywhere.
Yeah. It's not just Sydney. We're spread across. We've got 4 different offices in Sydney. So that'd be the Day Street in CBD, Ingleburn. we've got Narellan and Seven Hills, and then we've got Melbourne and Brisbane offices as well. So, or if you want to meet us over
Online
Zoom,
as well.
yeah, we can do a catch up over Zoom.
No, I love that. And LinkedIn as well. Can people reach out to you both on LinkedIn? Are you active?
Absolutely, LinkedIn.
Oh, very good. Very good. Well, thank you so much for being a part of today's Lawyer Lending Live, Ray and Tamara. It's been illuminating, and I'm sure people will get in touch presently.
No, thank you, Colin. Thank you for having us.
Mike, it was great. We enjoyed it.
Absolute pleasure. I'll see you soon, guys. And if you'd like to maybe connect and be on the Lawyer Lending Live show and you add value to the community, please get in touch. And if you stayed this long watching the stream, I've got a challenge for you. Hit that like, share, and subscribe button, and maybe even a cheeky follow as well. Wouldn't go astray, and you'll get similar content to this. Elevation through education. Have a great day, everyone, and we will see you next Wednesday. Chat soon.